Hello traders, this is Blake Morrow with Forex Analytix, and you're listening to the week ahead video for March 31st, Easter Sunday. Hope you guys and gals are having a wonderful holiday weekend. I'm going to try to keep this one fairly quick, just because obviously it's a holiday weekend. And if you think these videos are beneficial to you to kick off your trading week, to get you prepared for the trading week, make sure you give our team a big thumbs up. It is, like I said, it's a holiday weekend, but we wanted to make sure that we got you up to speed on the markets, what's happening this next week. And also, let's start with our special announcement. So on Friday, if you listen to the face show, our normal daily free face show, make sure you're listening in on Friday after the non-farm payroll. We're gonna have a special announcement with the Forex Analytix crew about a project that we've been working on. We're really excited about it. We thought we were going to release it a couple of weeks ago. We had to do a couple of technical things just to make it just a little bit better for your experience. So anyway, make sure you're there on Friday, April 5th. And we're going to be covering that. So like I said, it is Easter weekend. It's a holiday weekend. It's going to be Easter Monday for a lot of you in Europe. We're going to have a slow kickoff to the week, but it's a big week because we do have jobs report, not only from the US, but also from Canada. We're going to have a lot of data coming out throughout the course of the week that could move the markets. Before I actually get into the charts themselves, or actually into what's happening throughout the course of the week, I actually wanted to take you to a chart that I found very interesting. This is the CRB Index, well, Thomson Reuters CRB Index. It's not the real CRB Index, but it gives you a very good idea of what's happening in the commodities space. Now, obviously, you can see I haven't drawn on this chart in a while, probably since the end of the year, and I was drawing a bull flag pattern. The most interesting thing about this is we are still in a flag pattern, but more importantly, you'll notice right here we've only dipped even shy of a 38% retracement. So the reason why this is important is because you're seeing commodity prices not across the board. There's a lot of commodities that are moving, some that aren't moving, but as a whole, the index as a whole is making a move higher. Last week we talked about crude oil, and a break back below 80 would be bearish. I'll go back and reference that trade setup a little bit later. But we never broke back below 80, and just never went through the neckline. And now crude is back in the back cruising higher, and there's a lot of commodities like gold and other ones that are moving higher as well. The reason why I'm bringing this up is because it is going to be a little bit of a how should I say, an Achilles heel and a little bit of a thorn in the side of central bankers, as they're trying to clamp down on inflation with higher rates. The problem is you're seeing these commodity prices are starting to really stabilize and move higher in a lot of cases. So keep your eye on the CRB index or in the commodity space. I think that's going to be a talking point moving forward in the weeks and months ahead, actually. Also, I wanted to take a look at the dollar index, because the dollar index has made some nice gains. And let's pull up the dollar index really quick. And this is what I put out for you guys a couple of weeks back, right? Is the US dollar ready for a nice rally? And it has been rallying. Now, reason why I'm pointing this out is because I still think the risk for the dollar is higher in the coming weeks and months ahead, or at least weeks ahead. And one of the big things is going to be when you look at where the Fed's rates are, and then the U.S. economy, that exceptionalism story I think is still going to be around, and you're going to see the dollar continue to benefit from that. Are we going to get weak data? Maybe it starts off this week with the jobs report, but you've probably learned over the last 6 months, really over the last year, maybe even the last year and a half, it's been really tough to bet against the U.S. labor market. It's been quite steady for a whole multitude of reasons. But with the jobs report this week, the risks are building that, the job report, or the labor market continues to stay strong, and the dollar, continues to rally here. But I wanted to take you around the markets, around some of the dollar pairs. Like I said, before I even get into the calendar of what's happening this next week, I just want to take you through some of these dollar pairs because I think it's important that you see them and you know where the break points are in the market. So let's start off with the euro. Let me get rid of myself here, and you can see the euro continuing to move lower. We're below the 618 retracement. Okay, so the euro still has some downside before we get towards the channel support. So you can see channel support is going to come in right around the 107 level. We've been talking about the 107 to 110 range for a while. And given the fact that we're moving down towards the lower end of that channel, it could really open up some downside, especially if you start to see divergence between the U.S. economy and the Eurozone, which most people expect that the ECB is going to be quicker to cut rates. So, but you notice how the euro is drifting lower. We still have some room. Look at sterling. A couple of weeks ago or a week ago or whatever it was, and by the way, if you're noticing here, I leave my drawings on every week. So if I haven't talked about the sterling in 2 weeks, you're going to see the drawings from 2 weeks ago. I'll use these charts specifically for this week ahead video. You can see I have them noted as week ahead right here. I do that specifically so you guys can see what I drew the last time we talked about it, okay? And we talked about sterling coming down towards channel support, right? And you can see it right here, it has. Now, the thing about sterling is not only do we have the 200 DMA, which is the red, moving average right here, not only do we have channel support, but let me get rid of this fib and let me do it this way. So you'll notice that we have a 38% retracement right here, and then I'm going to do another fib with you real quick. That last move higher, you'll notice that that's an 88% retracement right there. So you have 88% retracement, 38% retracement, channel support, 200 DMA. So the question is, what do you think happens if that breaks down? Right? So those are things you should be thinking about. Also, what you're going to notice is the Aussie. The Aussie continues to show some signs of weakness. We do have this bear flag pattern. I think I've talked about it every week probably for the last several months about the persistent weakness in the Aussie dollar, despite what has happened in copper, despite what all the Chinese stimulus has been. Really, since the beginning of the year, the market came in thinking the RBA was going to be quite hawkish, and what we've seen in the Aussie dollar is the Aussie dollar has really sold off all of 2024, and it still looks very vulnerable. But you'll notice that we start getting below 65 cents, and that could open up a lot of downside. The Kiwi, we broke through 60 cents. We talked about this breakdown, right? So it is continuing to break down. Now the question is, how far can we go? And let me show you this. We are below the 618 retracement now. You'll see it there. We're below the 618 retracement now, which seems to me the next stop is going to be 59 cents. Now, if you're putting all this together, we haven't even looked at some of the dollar-based pairs. That means when the dollar is on the left-hand side. But what you're seeing here is you're seeing a pattern of the dollar starting to gain strength, against certain pairs. It's starting to break out against certain pairs. As a result, that is what's going to, continue to build that dollar index on a possible breakout higher. Take a look at the dollar CAD. We've talked a lot about it breaking above 136.30. It hasn't done so yet, but we know from last week, because we talked about it, if it breaks above 136.30, that's going to be a very bullish breakout. It's still holding up well, even despite Friday's data. I think Friday's Canadian GDP came in a little stronger than expected. That's helped the dollar CAD. Swissy. The Swissy has completed its bull flag pattern, its equal leg move finally this week, and we got to the 78% retracement. You're seeing a little bit of a pullback, but overall, the Swiss franc is an unfavored currency. Yes, we are starting to see a little bit of a stabilization finally after the sell-off from basically the beginning of the year, but I expect more weakness in the Swiss franc overall. So therefore, the dollar should continue higher here. Last currency I'm going to bring up for you is the dollar yen. The dollar yen, we've talked a lot about it being right up against resistance. Despite all of the Bank of Japan and Ministry of Finance comments, it's the dollar yen has not weakened, and I still think that the dollar yen can make it above 152 to get to 154, 153.50, 154 to complete this bull flag pattern that you see here. And then once it does that, it will look like a good short setup. Now, you guys know I've talked about it almost every week on the week ahead video for the last month. Still looking for that move. We haven't seen any weakness. And when, people keep shorting the dollar yen, and by the way, if you look at retail positioning in the dollar yen, very aggressively short. Retail, aggressively short. So there's a good chance that we're going to break right through that resistance, stop out all the retail shorts, anybody who's short dollar yen, get to 153, 154, maybe even 155, and then maybe we'll see some intervention. Maybe then we'll see a reversal. But again, you're putting all this together. What are we seeing overall? The dollar is gaining strength overall. And that's why when you look back at the dollar index, you can see, why I look at the dollar index and I'm thinking, man, there's probably some higher levels here to go. Now, the dollar index and by the way, this is the dollar index that I use for all of the shows, Morning Edge, the Face Show, the Daily Roundup, analysis. When I'm doing analysis on the Forex Analytix platform, it's done with this dollar index chart that you see here. So when I use this dollar index chart, and let me pull up the dollar index here, you can see it. When I pull up the dollar index chart that you see here, and I do the commentary in Forex Analytix, all this commentary, that's based off of this chart. So it's a universal one, and sometimes I'll use it here. So you'll see those drawings change from, this week ahead video, the next week ahead video, not just the, not the individual currencies, but the dollar index, again, just arguing it could continue higher. I still think this Gartley pattern and quite possibly a butterfly pattern. So at least a Gartley pattern. So the target would be 106.60, somewhere up there above 106. And then if things really get going, and you start to see, or let me take that back. Let's say the second half of the year, the U.S. economy doesn't weaken like most people expect. Most economists expect that, second half of the year, you're going to see some U.S. economy weakness. If that doesn't come and the economy continues to power forward, probably what we'll see is the dollar index continue higher and break out, towards 109 and change. So anyway, those are just some views about the dollar. Let's talk a little bit about, data that's upcoming throughout the course of the week. So, and I'm going to rattle these off really fast, and we will go into some individual charts as I do this, but let me do this before we continue on. If you haven't checked out the Trader Funding Program, you should. The Trader Funding Program it gives you the ability to access larger amounts of capital if you can pass an assessment. For those of you that don't have access to a $25,000 trading account or a $100,000 trading account or $1 million trading account, but you would like that access, you have to go through an assessment process. You have to make 10%. You can't have a drawdown more than 6%, and there's a couple other stipulations, and you have unlimited time to pass this evaluation. It's not a two-step process like a lot of these, prop firms. It's just real simple, straightforward. Trailing stop, you got to make 10%. You can't lose more than 6, and then there's going to be a trailing stop behind it. If you can do that over time, and there's no time restraints, nothing, saying, oh, you have to finish within 2 weeks. Oh, you have to finish within 30 days. No, you take your time. And if you can do that and you can pass, you can access larger amounts of capital. You don't have to take on the risk. All right. So this is a really, really good program for those people that want to access more larger amounts of capital, and you don't want to put your capital at risk. So check out the Trader Funding Program. There's a link down in the description. Now, there's also a link down there on how I passed an assessment, and I tell you how I passed an assessment myself, because it can be done. All right, so there you go. All right, let's continue on. What's happening this next week? So this next week, you can go through the calendar here if you want, but on Monday. So Monday, remember, it's Easter Monday, and because it's Easter Monday, there will be, it's going to be a little slow in the markets because there's so many, and your country may be one of them celebrating. But we will be releasing our ISM manufacturing PMI data here in the U.S. So there is going to be some activity in the markets. You're going to see, the markets move based on that ISM data, because we're going to get ISM services data later on in the week, but we're going to get manufacturing to kick us off. Monday night, we'll have the RBA monetary policy minutes. So it's just a meeting minutes. It's not the actual meeting. So it's, about the meeting that happened a couple of weeks ago. So we're going to get those monetary policy meeting minutes Monday night or Tuesday morning in Australia. On Tuesday, we're going to get the JOLTS data, right? And what we should do is we probably should take a look at the bond market really quick while we're doing this. We're going to get the JOLTS data, so some job openings data. And there's going to be a lot of Fed speak this week. We have the FOMC, Williams, Mester, Daly, Bowman are all speaking on Tuesday. And by the way, if you're looking at the bond market here, you'll notice how we are consolidating. And so I believe that the next move in the bond market, whether it is to the upside or whether to the downside, it's going to really lean into the dollar. So if we do think the dollar is going higher over time, that typically means that the bond market is probably going to continue to sell off, which if you look at the, overall trend of the 10-year right now, 10-year down, yields going up, makes sense, doesn't it? Especially with I showed you the commodities chart. Commodities continue to stay higher. Rates are probably going to stay higher. The Fed's going to be very reluctant to cut rates this year, especially if commodities continue to go up. Anyway, continuing on with the calendar. On Wednesday, we have Eurozone flash CPI estimates that are going to come out. We have ADP or private sector jobs data in the U.S., ISM services data, which I think is going to be the bigger mover. And then we're going to have Jay Powell. He's talking at Stanford's Business, Government, and Society Forum. And he's going to have some comments on Wednesday. Could be a market mover. Thursday, unemployment claims. We also have FOMC Mester, Barkin, Harker, Goolsby, all speaking on Thursday. Thursday night, and I want to talk about this really quick. And I talked about the yen a little earlier, but let's pull up the 6J. If you talk to my my colleagues, Ryan Littlestone, K-Man, which K-Man, he traded on, Japanese dealing desks at banks for many years, but he's been trading predominantly the yen for the last 20 plus years. Everybody, my team would really lean into the idea that the BOJ and the Ministry of Finance, the intervention is going to be when you start to see the yen as a whole break down. So, if I was the Ministry of Finance, I wouldn't intervene until I saw the yen break down. And once the yen starts breaking down, then you get people stopped out of yen longs, and then you intervene and make it go higher after that. Once you've cleared out all the stops below here, below here, below here, that's what I would be thinking. You intervene right at this spot. Well, the reason why I'm mentioning this is because, as I pointed out with the dollar yen's right up against 152. Also on Thursday night or Friday morning, there's some of the Rango, union negotiations, still some wage negotiations going on, excuse me. And so, that could be a catalyst of, hey, we're going to get, more wage inflation, could bolster the idea that the yen should strengthen a little bit. But, maybe if those negotiations, don't point to more wage negotiations, maybe that's what causes the 6J to actually break down. So just keep that in mind, back of your mind, going into Thursday evening, Friday morning in Japan. Last but not least, that's coming up for the week will be the jobs report. We have U.S. and the Canadian jobs report that's going to be out actually on Friday. We are expected to create 205,000 jobs, around 200,000 jobs this month, coming off of 275,000 jobs the previous month. Canada is expected to create 37,000 jobs. And we're expecting the jobs numbers to look good, not only in the US, but also in Canada as well. And so the reason why I bring that up is because that is what is going to be driving the dollar at the very end of the week. We do have Canadian IVPMIs as well. Keep that in mind too. All right, I'm going to go through a couple of these commodity contracts, and then what we do here at the on the week ahead video is we go through the 3 trade setups that I had from last week. We review those. I'm going to give you my 3 best trade setups of this week. But first, I want to talk a little bit about some of these other markets. So let's start with the gold market, and gold just continues to move higher. Now that is what I find really most fascinating. Let me find gold here. I'm sorry, where is it? There it is. So what I think I find most fascinating about gold is it hasn't backed off. And one of the other things about gold is it continues to move higher, even in the face of the stronger US dollar. So previously I maybe mentioned, I guess this was probably last week, I'm like, if it breaks back below 2140, then you got to short it. And then if it drops below 2080, you add to that position. I think that's why I put those there. RSI is still divergent, but we're still making new highs. So the next stop for the gold market is 2260 or 2360. That's I have actually more other levels we can talk about here. Just one second. That's not what I wanted to do. Grab the wrong thing. Give me a second here. There we go. 2260, 2250. It's actually 60. I think it's 60 is what it is. Maybe it is 55. 2255 is the 161% extension of this last leg lower that you saw back here in at the end of 2023. So we're coming up to some fib levels, very divergent relative strength. Got to be careful with it. But I think what you got to be more careful with, not so much gold, you got to be careful with silver. Silver continues to reject, and I think one of the things about silver, and let me pull up the weekly charts here and let's talk about it. It's obviously been a while since I've made mention of this, and I still think this is all possible. The thing about silver, though, is it is failing, on every move to $26. At some point, bulls are just going to get fed up and say, you know what? It can't rally. And if gold actually turns lower, you might have the silver market turn lower. And I know a lot of people are buying silver. That's the thing. It's like I think I've talked to so many analysts over the last month that are just very bullish silver, which I get. And I mean, it's moved up, since, for the last month, it's moved up from, $23 to 26, which is a good, percentage-wise, it's a good move. But I think everybody's expecting silver to go back to 40. And the problem is it's not going up while gold's going up. And so I think that is the risk with silver. So just be careful if you're trading it, because if gold turns lower, silver is probably going to turn lower as well. One of the other things I want to talk about is two other things I want to talk about: crude oil. But I'm going to do a bigger review on crude in just a few minutes, because we had this head and shoulder pattern setting up, never broke back below 80, right? Now we're just continuing higher towards the 618 retracement. Excuse me. My words are getting a little fumbled up here. To the 618 retracement around 84.50. So that's going to be the next target for crude oil. And like I said, the commodities, you saw the CRB index. It looks kind of bullish. Next, I wanted to talk about the stock market, obviously. So let's talk about the S&P. Nothing's changed in the S&P. It continues to look very strong. And I'm just going to give you, just real quick, let's delete this. We don't need that RSI. That was on the daily chart. See this line right here? You see that horizontal line? We're just going to move it up to 5,200. And I mean, if we break below 5,200, that's going to open up some downside. You might see a little bit of a move towards this ascending. This might be an ascending wedge, and then you might get a move back down towards channel support around 2150. Higher highs and higher lows, guys. It's just the market continues to grind higher. I know there isn't much to argue at this point that the market is moving, that the market's going to be ready to sell off, or a lot of people are trying to say that, hey, there's not a lot of an argument right now for stocks to go down. That's usually the point where we start getting a little bit more concerned. But technically, there's no reason to be short stocks. Technically, there is going to be some week ahead video where whether it's next week or whether it's 6 weeks from now or maybe 6 months from now, that we look at the stock market and I'll tell you this: hey guys, we're actually starting to make lower highs and lower lows. When I say that, whether it's next week, 6 weeks, or 6 months from now, that's when you should start going, oh, you know what? Maybe this uptrend might be changing. And then we'll, start talking about that case of why stocks might be reversing. Probably something has, changed from one week to the next. But right now, technically, the markets look bullish. And even, and I got to point this out because the market that's really been struggling the most has been the Russell 2000. The Russell 2000 finally broke higher. Now, here's the scary thing about the Russell 2000. Just if you're looking at this, you're probably thinking, oh, look, Blake, we finally broke out. Yay, look, price, and here I'll take this and I'll just draw it, move it over like that and go, look, Blake, we finally made higher highs. Yeah, but the problem now is with the Russell 2000s, we're up against the 618 retracement, and we have another, kind of pivotal level up here, right there. So, and you can actually stretch all that back because it's previous support right over here too. So yes, the Russell's finally grinding higher because, it's like being dragged up. But remember, it's mostly the S&P right now that's doing it. So anyway, I wanted to point that out. And one of the other things, really quick, just staying on topic with stocks, the NASDAQ 100 is stalling. It's like at stall speed. Does that mean it's a short? No, it's still in an ascending channel. But it is, and it should be noted that we are stalling. And, if we start breaking lower lows, that means we start breaking some horizontal support that you see here around, 17,800. That would and should get your attention in the event that happens. All right. Now, this is the point in the show that I'm going to go into the trade setups from last week. And, I forgot to talk about Bitcoin. That's all right. Bitcoin, lower highs. Doesn't mean it's bearish. Just, we're stabilizing around 70,000, but we're making lower highs now on a daily chart. So just keep that in mind. Okay. This is where we're going to do the best setups the setups review from last week. So last week we talked about silver short while we're below $26. That was one of the setups, right? From last week. So last week we were right here, right around $26, and we drifted lower throughout the week. And then on Friday, we popped higher. Do I still think, is that a win? It depends when you shorted it, but I still think while it's below $26, you continue to focus on silver to the downside. So, I think it moved down first couple of days of the week, shot back up. We're about break even for the week. So, Okay. Crude, the next one, number 2. Crude, short crude on a break below 80 because we had a head and shoulder pattern setup. It didn't break 80. So scratch that one. But like I said, crude does look bullish now. So we should probably just delete this because it invalidated that setup. And it still looks like it's going to move up towards 84, but it never broke 80. So is that a win? No. Is it a loss? No. It's a scratch. Didn't work out. It was a setup and it didn't confirm the move. Same with the dollar Canadian. I said, number 3, the dollar Canadian, buy it above 136.30 because it is the 618 retracement, right? Let's go back to the Canadian. You buy it above 136.30 and you target 137.40. Has that happened yet? No, it hasn't broken above 136.30. Not yet, but I think it's a good setup. So I would say for last 3 setups, between silver, crude, and the Canadian, I'd say it's kind of a scratch, right? Silver's where it was last week at this time, and crude and the Canadian didn't really do anything. Oh, they never broke where they were supposed to break. But keep an eye on that dollar Canadian because I think this one could still set up. All right, here are the 3, my top 3 setups for this week that I see. First, sterling. A break below 125.65. I already explained to you guys right at the very beginning of this video why I want to do that. It is channel support. It is horizontal support. It's the 200 DMA. It's the 88% retracement. It's the 38% retracement. So a break below 125.65, I think the sterling is just a short. Now, does that mean it's going to break? No, I mean, it could, maybe the sterling decides to trade inside of this channel. So it could. But a break below 125.65, I'll be looking for shorts. Next, you guys know number 2. You guys know I've been playing this quite aggressively. I sold my Euro Swiss, right? I sold it when it was, up here at the this extension. Once we completed all of these moves, I got out of it around 98 cents. Now, here's the thing about the Euro Swiss. I'm looking to get long while it's above 96.90. And let me delete this really quick. I'm gonna actually do some work with you on this chart. This chart needs some work. That head and shoulder pattern complete. That's done. That's done. Don't need that. We're gonna use this. I'm gonna recycle. Okay. So you guys see that 97 cent level? Somewhere around this dotted line, which is 97 cents, you want to be looking for longs in the Euro Swiss. Let me draw something else for you. That is an ascending channel that you guys can see, right? Actually, you can even do it past that, right? You can go like that, like this. It's all the same line, right? Same line, just like that. You can see how important that is. I think there's a chance we could dip below that slightly, get some longs out, and then you want to look for longs. Now, also, let's do some Fibonacci work really as well while we're here. So long-term 618. So you expect some sort of stall consolidation around these levels. So I want to be buying dips around here, looking for a move back up to here. You guys with me? All right. That was number 2. Number 3 is a trade that I do not have on right now. Is the Aussie Kiwi. Now, let me talk a little bit about this one. And there's nothing macro about this. And let me delete all these lines. These are old. Yeah, I just want to delete it all real quick. Okay. So the Aussie Kiwi. We're coming up to some pretty major resistance here. You can see where we're at is a very, very pivotal level going all the way back here, right around the 109.30 and change. So basically, I'm going to be looking for, and I I don't have a position on the Aussie Kiwi right now, but let me do this for you. We're at the 127% extension. Let me do this. Okay. We're at the 127% extension of that last leg lower. Relative strength looks very divergent here on this move. So now that we're up around these levels, I'm looking for shorts. And obviously if we get back above, 109.60, 109.50, 109.60, then you don't want to be short anymore. Because if we do break above these levels here, there's probably a lot more squeezing to do. But I think we're pretty overbought, very divergent relative strength. I am looking for shorts. I don't have a position on, but I'm going to be actively looking for one this week. All right, guys and gals, if you think that this video has been beneficial to you, make sure you give me a thumbs up. If you want to wish me a happy Easter, you can give me a thumbs up too. Remember, it's free to subscribe to the YouTube channel. And it's free to hit that bell icon so you'll be the first to be notified when these videos are released. It's free to do all that. And jump down in the comments below. If I missed something, maybe there's something that you wanted to, that you didn't agree with, jump down in the comments below. Tell me your thoughts. And then also don't forget on April 5th, a non-farm payroll, you should already be at the Face Show. But make sure you're listening to the Face Show for our special announcement at the Forex, from Forex Analytix from our team to you. So with that being said, have a wonderful holiday weekend, and thank you for spending your time with me. I do appreciate you. I know it's your weekend time, your time with family. It's very valuable. It's very valuable for me as well. So given the fact that you just listened to this video and you spent your time with me, I really do appreciate it, and I thank you for that. So have a great remainder of your holiday. I'll see you either Monday on the Face Show, or I'll see you on Tuesday after you celebrate Easter, depending on where you're at or what holidays you're celebrating. So happy holidays to you guys. Talk to you soon. Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.